Hi guys, Dan and Kai here again from Crescent Mortgages, and we are coming to you with more of our FAMQs, frequently asked mortgage questions. And today's topic is covering how to lock in a new interest rate early, specifically when remortgaging. This is particularly relevant right now because interest rates are on the rise, so the sooner you lock in a rate, the better. As always, we are CMAT qualified mortgage brokers with over 20 years experience in the industry. Is that right?
That's us. Yeah.
There you go. Let's jump into it. Okay, so the reason why we're kind of making this video at the moment, we've had a lot of questions from clients, a little bit of history. So at the time of filming, in the last 6 months, we've seen interest rates jump up more than they have in the last 10 years. So pretty much on a daily and a weekly basis, we're seeing lenders increase their interest rates constantly. So they're slowly creeping higher and higher and higher. Now, normally when your remortgage is coming up, so when your current scheme is coming to an end, you might apply for the new mortgage around 3 months early, which gives you enough time to get all of the remortgage work done in time and means you can kind of lock in a rate around 3 months prior to the scheme ending. Because rates are increasing so frequently at the moment, most of our clients are trying to lock in a rate as early as possible. So even if their mortgage scheme is coming to an end in 5, 6, 7 months, because rates are jumping up so quickly, they want to lock in a rate now. Because when you apply for your mortgage, that's when the rate is secured. So there obviously is a benefit to applying earlier whilst interest rates are increasing. Now, one thing we will say is mortgage offers. So historically, mortgage offers, which means that your mortgage has been fully agreed and they issue a document to confirm mortgage is agreed, will be valid for how long?
Historically?
Yeah.
Well, I think...
A little history
well,
lesson.
no, yeah, I would say probably what?
Don't drag it out.
10 years or so ago when we started in the industry, it was quite common for a mortgage offer to be 3 months long. But now... a high portion, not all, but a high portion of lenders will give you 6 months or close to 6 months. Some are a little bit shorter, but a lot of them will give you a longer mortgage offer, which is a huge benefit in many ways. Because it means, as we've just mentioned briefly, that you can actually start remortgaging 6.5 months before your scheme comes to an end. That is probably the time when you want people to start looking ideally. Certainly in a market where rates are increasing.
So previously, if your scheme wasn't coming to an end for 6 or 7 months, possibly there wasn't a huge amount you could do. You just have to wait whilst you're watching interest rates go up week in, week out. There wasn't much you could do. Now there's a large majority of lenders whose offer will be valid for 6 months, which means that you can apply for the mortgage 6 months early. Now, as Kai just touched on there, the mortgage offer often takes several weeks to be issued because you don't get the mortgage offer until they've run the credit check, they've assessed your documents, they've run a valuation. So with some lenders, let's say the mortgage took 3 weeks to be agreed, then you could, and they had a 6-month offer, in theory, you could apply for the mortgage 6 months and 3 weeks early and lock in the rate. And that rate would be valid all the way until your current scheme ends and the new deal starts.
I think the potential downside to coming this early is that the best rate might not have a 6-month offer. But that's better to know and decide on that at the time versus waiting for everyone to be in the market. If rates are going up and that mortgage offer is only valid for 3 months, well, it's irrelevant almost because in 3 months' time there's a good chance that it's not going to be there. Probably almost won't in this market.
Yeah, exactly.
So there's something to be aware of, but that's just a question to ask when you're talking to your broker, your bank, whoever you're talking to.
Yeah, and the one thing to mention as well is that if you apply for the mortgage 6 months early and you lock in a rate, but then you decide either not to go ahead with the mortgage or interest rates for some reason plateau or start to drop down, you're not committed to that mortgage. So you're not really losing out by securing the rate early. If in 2 or 3 months rates go down, you can either, some lenders will let you actually just pick a new lower rate from their product range. If not, then you can reapply for the mortgage either with that lender or elsewhere for a lower rate. So it's very low risk to apply early and lock in a rate. I think that's a pretty straightforward one, isn't it? But it's just getting it out there to people in the current market. Again, if you're watching this in 6, 12 months time, we could be in a different economy. But right now, as we're filming this, rates are increasing day in, day out.
Do we cover how? I think just very quickly, Dan did mention it briefly in his kind of almost opening statement. If you will, that you when you apply, you secure your rate. So talk to your broker, talk to your bank, Normally you can get applied within a day or so from there if you want to, so you can secure it very quickly from the time you inquire.
Especially with a broker.
Yeah,
Obviously
yeah.
some banks you might need to book weeks in advance, but a broker can generally turn it around pretty quickly for you. That's great. As always, guys, any questions, either contact us directly or you can leave the comments. You can leave the question in the comments. We'll come back to you and we'll see you next time. Thanks a lot.